Traders all over the world are already using switch markets. Thousands of traders just like you across multiple markets each and every day. If you haven't joined yet, you can open an account and begin trading in just a few minutes. Click the link in the description.
What am I doing? I told myself this year was going to be different. So many things I want to achieve, yet I'm here wasting my time doom scrolling. I was going to start running again. I was going to make more of an effort with my friends. I was going to work on my confidence. I was going to get fit again. I was going to start trading. Time to wake up and stop making excuses. Okay, switch markets. Let's do this. When you're ready to trade, Switch Markets is waiting for you.
By the way, you're not trading alone. There's a whole community of traders tuning in daily, sharing ideas, watching the markets together, right here on the Switch Markets YouTube channel. If you want to be a part of it, subscribe and tune in daily. I'm here to answer your questions live.
Time moves in a constant rhythm. Every second counts. Every decision carries weight. In trading, the cycle never stops. Opportunities appear, they disappear. Sometimes before I'm ready. Even when I step away, the market keeps moving. What if I'm wrong? What if I miss? What if this one turns against me? Every chart I've ever studied, every level I've marked, every rule I've committed to, all of it comes down to one moment. Executed with clarity, without hesitation. Because control is choice. And in that moment, control becomes edge. Switch markets. Trade with discipline.
If you're already trading, why settle for average? Switch Markets is raising the bar. Tools, resources, dedicated live support. It's time to make the switch to Switch Markets. A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.
Are you still trading everything manually? More traders are moving to automation, running strategies 24/7, removing emotion, and staying consistent. Now with Switch Markets, you've got the tools to build and run your own automated trading systems, so your strategy delivers even when you're asleep.
Meet Switch Markets, a broker for ambitious people who want to trade the financial markets.
You mean that I can trade things like Forex, stocks, even gold with you?
Yes, you can even trade the coffee bean market with us.
What about digital currencies? Can I trade them too?
Absolutely. Maybe now's your time to get in.
Oh, and are you regulated?
Yes, we are.
And how easy is it to deposit and withdraw? Will you charge me any fees?
It's easy. Deposit and withdraw instantly. Nice and simple. And unlike that guy, we won't grab any fees from you.
Do you have a low spread trading account?
We certainly do. Pick from our zero commission or our low spreads account. It's up to you.
Okay then, what makes you so different from every other broker out there?
Our 5-star rated real human customer support and our perks package worth thousands. No other broker can beat it.
So, who did you say you were again?
Switch to success. Trade with Switch Markets.
Hello, everyone. Welcome back to the Trading Room. I'm Shain Vernier, and this is No Donation Friday. Today, we're going to go ahead and cover the 920 EMA Crossover. This is going to be a formal workshop, but we're also going to do some live trading once we get the basis set. We've had a pretty good week, so we're going to see if we can do a little bit better. But today, we are going to focus on trading the 920 EMA Crossover. So if you're interested in a base strategy, you're in the right place. It's not the most advanced strategy in the world, but guess what? It doesn't have to be effective. Now, I'm going to show you the proper time frames and some of the markets you need to be looking at. We're also going to do some high-impact scalping using this strategy and just by incorporating a little bit of confirmation. We can get that accomplished. So good to see everybody back. Tuku, always a pleasure to see you, Tuku. If you're out there in YouTube land, Jason Max and Yo Shane, what's up, Jay? How you guys doing? We'll go through the workshop first, and then potentially we'll look to maybe cover some of the news, but honestly, I'll probably save that for Monday. We've got a lot going on. I think it's going to be a fantastic weekend news cycle, and we're going to be in for a very volatile Monday session. So good end to the trading week, strong trading day. We're going to have opportunities to trade, and this 920 EMA is a pretty good strategy to do so. So first and foremost, if you want to watch some of the official tutorials, you head on over to the How to Trade.com YouTube channel, and we've got all sorts of videos there. There's the official video, Learn the 920 Crossover Intraday. It's been a popular video for us. We put it out, about a year ago or so. It's got, significant views. I'd say it's one of the strategies that I'm most questioned over. A lot of people ask me questions. A lot of people critique the crossover. A lot of people really don't like it. Some people do like it. And like I say, listen, every strategy has some merit to it, but you have to trade it on the right time frames. You have to trade it in a proper fashion to give yourself an opportunity to succeed. So I'm going to give you some pointers today. I'm making this 920 really sing, and then we are going to trade it live. Now, in order for me to trade it live, it's going to be on very, very short time frames, which is much, much higher risk, no question about it. But when we break this thing down, it's easily applied. I'm going to show you how to put it on your trading view chart, how to put it on your MT5 platform, and then we're going to be up and away with our rules. Very simple. And then we're going to talk about trade management, which will make you successful. That is what will make you successful. You will either be able to manage these trades and allocate risk capital properly, or you won't. But in any case, I've done a ton of content on the 920 EMA. There's a video there. There's a bunch of shorts over there. That's over on the How to Trade.com YouTube channel. And just go ahead and run a quick search, 920 EMA, and you should be up and rolling. So that's where you find all the official tutorial stuff. And today we're going to trade it live and do a live workshop. Remember, these workshops are interactive. So if you have a question, ask me. And that's what these are for. Bottom line. All right, guys, good to see you. Let's see. Hemad, hey, Shane, morning. Glad to see you. Market is in a whipsaw. Yeah, it's challenging, Hemad. I mean, it really is challenging right now. There's so many things going on. Bank of Japan during the overnight was the big news. They intervened in the Forex market to the tune of, about 58 billion or some crazy amount of money. It was in the trillions of yen. Maybe it wasn't 58 billion. I forget the exact number, but it was in the trillions of yen. They decided to intervene, and that's so supported the yen for now. Put a trade ID out on the yen a little while ago. Be sure to check that one out either on my X account, ShadenV_trader, or you can see it over at howtotrade.com. Let me see, Tammy. Good to see you, Tammy, over the How to Trade community. Tuku, Ralph H. All right, guys, good to see you. Welcome back. Let's go ahead and get started. The first thing I'm going to do is show you how to add the 920 EMAs to your charts. Very simple, guys. So let's go. It's a good place to begin. Let's go ahead and just go to moving average. You just cursor down through indicators. We're looking for exponential. The reason why we're using exponential moving averages is because, why? Does anybody know? Let's see, 5, 4, 3, 2, 1. The reason why we're using exponential moving averages is because we want to be able to value the most current price action. We want to weight that and make sure that it is definitely valued more than longer-term price action. So essentially what an EMA does, it weights price action of the most current price bars or durations more so than the previous or the long-term stuff. That's absolutely critical. You understand that? The EMA is designed to keep us what? Current. We want to be current. I don't want to be making decisions on price bars that are too old. So when I go to an EMA, that keeps me in the loop. That's the way I think of it. Keeps me on the lead lap, so to speak. All right, let's go to inputs, and then you're just going to go through this right as I am. 920, you go ahead and add it twice. 20 and 9. Close is a source. Very, very simple. I always like red and blue. Red's my hot. That's my short term, and blue is my longer term. That's how you set that up on TradingView. Let's go ahead over to MT5. A bit more involved, but not really too much. Insert indicators. You're going to go right there to trend. You're going to go to moving average. Give it a click, and we're going to go ahead and dial that in for 9. Exponential. Orange, red's just fine with me. I like to make them thick, even though sometimes it can be a bit confusing where to see the exact crossover. But for these live streams, trading purposes, the thicker lines are much easier to see. Indicators, trend. Let's see where we just had it, right? Moving average. There you go. Moving average. Let's go ahead and dial in the 20. That's your period. Exponential is your method. That's pretty much the only difference here. Not smooth, linear weighted. You want exponential. That's the one in the middle. And, of course, make those colors different so you have an opportunity to see it right away. And as you can see right there, we're looking at the Euro Swiss franc 4-hour chart. Beautiful cross under right there. The 9 crosses under the 20. That potentially would have set you up for a decent trade. However, your price bar would have been a bit big. So, one of the great things about modern technology is we've made some of this stuff really simple. We've made some of it very, very simple. I've got a coded version that we're going to be using today for the 920 EMA. I'm going to get to that in just one second. Let me see HEMA, and also today being the last day of the month, the last day of August, guys. Last day of August, absolutely huge that we understand the calendar. Okay, here we go. 920 EMA Crossover Workshop, welcome. If that's what you want to learn about, you're in the right place. We're set up with it on our charts. We've got our 9 and our 20 on the charts, and we're ready to rock and roll. Here's the rules. Very, very simple. 920 EMA Crossover. We buy the market when the 9 crosses over the 20. That's it. We sell the market when the 9 crosses under the 20. That's it. You can use this on any time frame. Just be sure to do a little back testing first. A word to the wise and a pro tip. The smaller the time frames become, the choppier the price action. And the more likely you are to get caught up in a situation where you're going to struggle to be successful and get a clean break. When we're trading crossovers, we're looking to ride the momentum and get a clean break in the market. That's what we're looking to do. So, shorter time frames, it becomes more of a challenge only because there's more signals. Stop loss is going to be above or below the previous swing high or low. We're going to cover that or the signal bar. I'm going to show you that nuance as well. Profit target can be a fixed risk versus reward or market structure. It can also be dynamic. We're going to apply some of our dynamic principles on some very short NQ trades here very, very quickly. So in order to make this as easy as possible and to see our trades really develop in real time in front of us, I built a video not too long ago using AI to code the 920 EMA crossover. And for right this minute, this is sort of what we're going to be using to do our live scalping here. You can see that when we on the code, when we get a cross under, you're going to get a purple bar. The purple bar is going to light up. When you get a cross over, your gold bar is going to light up. And also, one other very, very important thing that we'll get into here in a minute, the area between the EMAs is shaded. So this was a script I wrote not too long ago. If you go through and check out this video over on the How to Trade Calm YouTube channel, in the comments, I believe it's in the first or second comment, I actually give the code out. So you guys can have the code, apply it to TradingView, use it however you see fit. So other than that, there's not a whole heck of a lot to it. We're just looking for buys and sells. So let's go to our Google chart. I put this on the Google 30-minute chart. You can see sort of there was your crossover on today's open. Your buy signal would have been right there. Just to give you a basic dichotomy of what the trade would look like, it would have been a long position on the bar close. Stop loss could have been beneath this swing low. Profit target could have been a bit higher. I recommend at least a 1-to-1 for fixed, maybe 1-to-2, 1-to-3s. These are sort of a trend following approach. You definitely can get in on big moves with this strategy, but definitely understand that where we get in has to be correlated strongly to where we get out, and where either on a profit or a stop loss. We are not twisting in the wind. This is a finite strategy, and I really would approach it that way. Okay, so let's go ahead. We've got the code down. Remember that essentially when we're talking cross unders, we sort of just went through that. The gold's going to be a crossover. The purple's going to be a cross under. One thing that I would definitely urge you guys to understand before we go any further and get into the live trading facet of this live stream is right here. This is what we call a weave. Frequent crossovers. When you get frequent crossovers, you've got to understand that it's higher risk trading, especially with any type of crossover, 5-8-13, 9-20, whatever you may be using. Frequent crossovers are what we call a weave. It's a weave formation. That means we're weaving in, we're weaving out. We're crossing over, we're crossing under. The more frequent the crossovers, the flatter the market is. And remember, yes, technically you could be in for a big move after a weave, after a prolonged weave. Just understand that weaves are very difficult to trade because you're going to get stopped out repeatedly. Also, they happen. Holidays, lots of them on holidays. Low liquidity, flat markets, that is when you get into the weave formation. All right, off hours. Take a look at this Google. This is a fantastic example. Yesterday, real flat day, right? And then the earnings came out. Why do you think Google was really flat yesterday on a 30-minute time frame? Why would that be? Because earnings were dropping, weren't they? Alphabet earnings. What happens afterwards? Yeah, the market opens up a little bit on today's action. So always understand your time frame, what you need to be doing to be successful. Now, very briefly, if you're a Forex trader or if you're just an active trader, take some notes on this. The ideal time frame for intraday trading on a Forex pair, say Great Britain pound USD, we're going to be looking at that US London overlap right in there, sort of right in this zone. You'll notice where your volume typically kicks up pretty high. That's where you want to be doing your trading, especially on short time frames. Now, during let's say the London overnight, yeah, you probably could execute up here as well, but take a look at this weave formation. You want to be in there when participation's the greatest. Forex pairs, I would be my go-to on a 920 EMA crossover is going to be a 4-hour chart. And it's a swing trading approach, but take a good look here. You've got really a great trade. Well, that's a monthly chart, excuse me. Fooled myself there. I got looking at the durations. What I would be looking at, though, yeah, I mean, this is even better, even sweeter. 4-hour crossovers on the Forex, very strong. But that is a swing trading approach. You will be holding positions for multiple sessions, no question about it. 920, though, 4-hour chart on Forex, that's fire. That's fire. That's pretty good. Now, I also love the dailies. Dailies are big. Nobody really likes trading dailies. I like dailies. I really like dailies. Now, here's a great example of a situation where what would you have had here? You would have had a beautiful cross under back here. You would have had a real nice trade. You got it on this big move. You didn't get stopped out. Up there would have been your stop. Great trade right there. Swing trade. Here's your crossover, right? You've got a pretty big bump right there to the top side. Pretty big bump on the top side, but you held for a while. Not a bad trade at all either. This cross under was pretty much a complete bust. This one lost bad, frequent crossover. Now you've got a crossover potentially where you could send them long. So your trade, let's nail your entry. This is a great example. Daily chart, your entry is going to be right on the close of that bar. Bar closes, crossover ensues, boom, boom, out go the lights. You're going long on that. You're going short on that. Right there. There's your market. Use a market order. Very, very simple there. Now, where are you going to go ahead and put your stop loss? I prefer, especially on shorter time frames, to put it beneath this area, beneath this previous swing low. Now, on a daily chart, a little bit different. That's going to be a big risk. These longer time frames, you could probably put it right up there. You could probably put it right beneath that bar, depending on how big this signal bar is. You'll notice back here, if you played it really tight, you got stopped out before the getting got good. I would suggest, as just a base strategy, putting that stop loss right there and definitely looking to grab the run up somewhere up in here. 1-to-1 is a basis for me. Now, you can also do market structure. In this instance, you could have shot for this, but it wouldn't really have been worth it. You're going to have to extend, maybe look for a monthly or yearly high, monthly high, something like that. Taking a shot somewhere in that vicinity. That is a big trade, though, guys, especially on dailies. Those kinds of trades, those 1-to-2s, 1-to-3s, 1-to-4s, those get better potentially on 4-hour charts, 30-minute charts. Not 30 minutes, not bad either. If I was trading a 30-minute chart on the Forex pair, now this is Forex only, all right? 30-minute chart, Forex only, I would probably trade that through the London Open, through the end of the London-US overlap. After that, I would ignore it. I would ignore 30 minutes. 5-minute charts, short time frames, you're looking to execute on the London-US crossover, 100%. Those are good guidelines for Forex pairs. Very, very good. All right. Okay, let's go trade. And sort of my weapon of choice has been this week. We've been trading a lot of futures. It's been pretty good to us as well. Let me see, 512. 512 Eli. I definitely risked too much today. That's not good. HEMA, better it needs to be at a 45-degree angle. Well, the problem with finding the angles ahead of time is they don't really develop until they've already developed. So let's say we're somewhere in here. Let's say we're working in here. We're trying to figure out maybe our next trade. We've got a sell working. Got a pretty good move if we didn't get stopped out. This one got a really nice jam there. But the 45, you could almost wait for it to develop and then buy maybe a pullback on something like that. You could certainly do that. We're going to explore all of these opportunities here in the live market. Okay, well, hang on a second. We've got one more question here, Hema, and then I'm going to go ahead. Financially free. This is live. Go ahead and ask me anything you'd like. I got way behind on the live chat already, but interesting. Yeah, live. It's live financially, absolutely. Hey, Shane, what would be ideal time frame for decreasing false signals trading the 2 EMAs for high volatile assets, NAS 100, ES, and GC? Yeah, that's exactly what we're going to do right now. Ideal time frames For those, U.S. session, I would be looking U.S. session for the NAS, ES, and GC futures. 30-minute chart's pretty good. 5-minute chart's not bad. We're going to be going tighter than that. We're going to be trading probably 5s and 1s on this live stream. So I would say 5-minute chart's going to give you a real good chance to stay out of the noise during the U.S. session for those futures contracts. Absolutely. Eli, risk too bad much. HEMA, it needs to be a 45-degree angle. Question from Alec, and then we'll go ahead and get started with the live trading. You guys probably know exactly what I'm going to go to, but that's okay. Alec, hi, Shane. Happy Friday. Happy Friday, Alec. Good to see you. How does the EMA 920 compare to the EMA 5813? 5813, are there markets and instruments and timeframes which are better, adapted to one, but not the other? Okay, 920. I just basically gave you the breakdown of how to trade Forex using the 920. You're looking at 4-hour charts. You're looking at dailies, also 30-minute charts, probably from the London Open till the end of the U.S. into the London U.S. overlap. That's a pretty good sweet spot for like a 30-minute chart. I wouldn't go any lower than a 30-minute unless we've got big news items out for Forex pairs. It gets very, very choppy unless you're trading exotics, but even then the spreads are too big. All right, now 5813 EMA. We covered that last week. 5813 scalping. Think scalping with the 5813. I'm thinking 30-minute charts, my baseline. I'm thinking 5-minute charts. I'm thinking 1-minute charts during the most volatile active times. Go back to the Fed meeting we had this week. Take a look at a few of those trades that I placed on gold using the 5813. Also, take a look at some of those that I missed in the equities markets, the 5813. Highly volatile periods, 5813. Position trading, day trading, potentially swing trading, 920. And it's not even close for me. That's the way that I see it. All right, financially free, sweet. I'm glad to chime in, absolutely. One more question, and then we're going to get out to the money. All right, I already used the 920, so I'm looking to fine-tune only. I only trade futures, primarily MNQ, MES. Okay, so you're trading micro E-minis. That's great. We're going to trade full-size NASDAQ here, full-size NASDAQ, and then we're also going to look at crude oil and gold, although I'm not going to make any promises on gold today because gold this time of day, I don't love it. I don't love it to get a big move, but we will do it. HEMA, Shane, any good confluence to use with EMAs that would increase the confidence in opening trades? RSI, confirmations RSI. We're going to get into that in 2 seconds. All right. Ralph H., is there any way to guard against fake outs with this strategy? Ralph, the best thing I can say. Lyndon, good to see you. Lyndon, welcome. The best thing I can say, Ralph, and great questions, guys. Keep them coming. The absolute best thing for me personally, when I'm looking at this stuff and I'm saying, okay, what do I need to avoid to get faked out? I'll just give you prima facie evidence. That's the best kind. Right here. This. That's a weave. Look at the frequency. Look at the frequency of crossovers. You see that many crossovers? You darn sure. I mean, listen, if you took this one and lost, I don't think you reverse right there. I think you take one and you lose and you let this thing maybe clear for a while and then set up again. You start seeing frequent crossovers, you're in big trouble. Now, the next question, Ralph, and I'll beat you to it because it's a good one. Well, how do I know that I've got frequent crossovers? Okay, number one, you're right. You're 100% right. Things like this right here where you've got one bar up, the next bar down, the other bar. This right here should scare everybody out. You shouldn't be looking for the next one. Okay, the next crossover I'm going to jump on. Forget it. Let this thing iron itself out for a while. But even then, you know, you get a little bit of love to the downside. This upside, potentially, maybe. You got a little bit. What I would say is in order to really qualify it and avoid the fake outs, typically when you have these weave formations, there's a couple of indicators that can help you. Number one, the space between the 9 and the 20 is flat. Dead as disco. Dead as fried chicken. It is flat. When it's flat, when it's very, very tight, the area between those is tight, you don't want any part of it. Now, you want to be in the market when this happens, right? You get in on your big move, and that's great. So let's say it's really, really tight in here. We want to see it open up a little bit. That'll tell us that there's volatility in the market. Like something like this, we might have got faked out on that short. We still got a little bit of love to the downside. And here to the top side as well, very tight. But still, those trades produced a few pips. What we're looking for here, though, is we're looking for moves. We really are. So the number one thing I would say is the weave, when the distance between those 9 and 20 EMAs is tight, that should definitely scare you. Maybe just manage your leverage a little bit different. The second way, and the qualifier that we got asked pretty much twice at the same time, RSI is a pretty darn good way to do this. Pretty darn good way to do this. Now, the thing about RSI, and the way that we use RSI, I'm always looking sort of to fade the trends and get in on reversals using RSI, right? Well, take a look at what happens here, though. We've got this weave, and it's just dead in there, dead as fried chicken. Nothing's happening. Look at what's happening to your RSI. You are right around 50. You're not breaking beneath 30. You're not breaking above 70. You are right around 50. That should be a pretty darn good qualifier that you're like, I don't think I'm going to make a trade because we're in the middle of this RSI. Now, up here, we would think with a lot of our other strategies, I'd say, okay, we're in overbought territory. I want to sell it. Well, look at what you have here, though. All of a sudden, you break into overbought territory and you get a buy signal. That's potentially leading you into a breakout situation. And I'm not just saying that because it works in hindsight. We got to be flexible with the way we think. Now, of course, if we trade up here for a while, then we're going to look for a cross under, maybe. But even this trade right here that developed on this 30, this cross under, right on the London Open a few days back, you're still right at 50. And then look at what happens here. You get the buy signal, and then you sort of rotate right up to the top of your 70. So what I'm saying is that RSI, if it does nothing else for you at all, it doesn't even have to qualify a trade. If it does nothing else for you at all, it can keep you out of that weave. Frequent crossovers, small distance between EMAs, and like a 50 reading on your RSI, punt it, stay out. It's not worth it. So that's a pretty good qualifier there. I think those are pretty good guidelines. All right, financial free, absolutely. Okay, yeah, I trade futures as well. Okay, let's get in and start trading, guys. Sazin for a fast scalp. Yeah, we're going to use it using a fast scalp as well. We're going to dive in right now, and we're going to go to work on the full-sized NQ. Before we do weekly performance, this is No Donation Friday. We got a lot of new folks that showed up today just for the tutorial. That's great. These are the numbers. These are the numbers from this week. It's been a fantastic trading week. We made all of these trades live on our 1 hour live streams. That's product of about 5 hours of work. All right, 4 hours of work. We're doing the 5th right now. On Fridays, No Donation Friday. What that means is we're putting 50% of the money, at least 50% of the money in our pocket. We're not going to lose any more than that. So if I'm up 962 on the week or 967 after commissions, we're going to divide that by 2. All right, so we've got 483 to play with. I have no intention of doing that. We're going to go in with a hard risk of $350 today. That's what we're going to work with. I'm going to use the 920. We're going to go in looking for trades. We didn't get any trades yesterday. The market was really challenging. We didn't take any trades on Monday because it just wasn't – I don't like trading Monday, really, to be honest with you. I like game planning. So today we're going to get in there. We're going to scalp. We're going to risk a maximum of $350, and we're going to look to make some returns. No pressure on us. We've had a great week, and I'm looking forward to getting this going for today's session. All right, let's do it. Okay, so let's get right out to price action here. NQ, let's start off with the E-mini NASDAQ futures. And remember, everything I do here is demo dollars. If you just click the channel, that's okay. Remember that I'm not a financial advisor. Everything that I do here are trades that I would be looking at taking. But the demo dollars, well, that's the way it is for right now. We're talking about transitioning to real money. Perhaps it happens. That gets us into some regulation areas that a lot of other folks don't have to deal with. Me personally, trading real money on live stream, I would love to do it. Not afraid of it at all, believe me. But for right this minute, we're on demo dollars. So my leverage is going to be realistic leverage, number one. I'm not going to give you the private jet speech. I'm not going to give you the new Ferrari speech or any of that. We're not going to sit here and trade 10 bangers on the NASDAQ. We're not. We're going to trade twos. We're going to trade ones and twos. We're going to be looking at WTI crude oil. We're going to be looking at E-mini S&P 500, E-mini Dow, NASDAQ futures, and gold. All right, here we go. 30-minute chart's way too big, but you do have a gold, potentially a crossover trade brewing there, a little bit of a short earlier. First thing I would do that I want to check on, let's go to a 5-minute chart. Okay, 5 minutes, absolutely beautiful there. You can see you've got the break, the bullish break right there in the NASDAQ. That's absolutely fantastic. Rocking and rolling to the top side. That came across the board about an hour ago. That's been a really strong trade, really strong trade. So we're not going to have anything on the 5 minute. Let's go right down to the 1 minute. 1 minute chart, and here we are. Okay, now this is interesting. This would be a potential contrarian play for me. All right, now the 1 minute came right across the board about, let's see, not even an hour ago, about a half hour ago, 40 minutes ago. Beautiful trade, absolutely beautiful trade. Got you into some great action here on the NASDAQ. This sell signal would have been a loser. This buy signal would be a winner. This one right here, though, we're looking for a sell. Now, we're not really trending too hot. NASDAQ's up about 0.75%. So in this situation, I would definitely be looking to get a cross under. I want the 9 to cross under the 20 on the 1-minute chart, and I have no problem taking that trade. Our qualifier, take a good look at where our RSI is. RSI is above. It is above the upper constraint at 70, so we're right up in this area. If we get that pullback zone, I'd love to sell with the RSI maybe like right around 65, somewhere in there, maybe a little lower. So I'm looking to sell this thing. Cross under, 9 crosses under the 20, we're going to take it. All right. Let's go ahead and open up another one. Let's duplicate our tab and see if we can find something on our next market. Our next market we're going to look at, let's go to the commodity base and go to gold. Gold futures, 30-minute gold. You can see this is August gold. It looks to me like we have rolled over officially. Let me go ahead and double check. I haven't traded any August gold. Let's see. Haven't traded any August gold yet. Today, anyways, or last 2 days. Yeah, so we've already rolled to the V market, so that's fantastic. I love trading. Well, are we already on December gold? I love it. Absolutely love it. Oh, that's fantastic. Let's look at the quotes real quick. What I'm doing right now is I'm looking for the front month. We're on we're on DEES. Oh, I love it. It's a great time to be a gold trader. As soon as we clock over to the DEES contract, I'm a happy man. That's the end of your year. You definitely want to be making sure you're trading the front month. It's easy to see the volume's gone. December gold's my favorite, though. My favorite. Good volatility, good volume. Nice move today. Off about 1.31%. Looks like we're getting a bit of a move. Let's take this down to a 5-minute. Okay, you can see the 5-minute right here is already live. Fantastic trade. Let's go down to a 1-minute. Okay, our 1 minute's already gone, so we're missing all these trades. You guys see that it's problematic. Right there was your entry point. Beautiful move right there. Let's go to a 5-minute chart. Love the 5-minute on intraday gold. Absolutely love it. Sell there, buy there. Would we have taken that trade, though? That one would have been tough. That would have been tough because you've got to sell, and then you're getting the buy, and you're right around 50%. Not great. Not great at all. This right here, though, that is great. That is pretty good. Nice big break. Why would we consider taking that trade? Even though this is sort of your weave formation. Very, very flat in here. Gold kicks off at about 8 a.m. Eastern. Typically, volumes pick up. You've got the U.S. traders, the European traders. That's where that overlap really begins. Beautiful trade. Beautiful short right there. That's good stuff. This one right here, pretty good late day buyback. Going into the weekend during a war. Not a bad play at all. Good look at gold right there. I'm not impressed. I don't think we're going to get a trade yet. Nice big tail, though. Look at this. Would we trade a cross under right now? I would consider it. Absolutely. Absolutely. The swing high, though, significant. Very significant. Remember, we only got $350 to risk. That's for sure. Let me see. Sup, Shane? How did you end your trading month? Pretty darn good July. Pretty darn good July, Packet. Pretty darn good. So with the last 2 weeks, just on these live streams, we're up about 1,400. My regular trading been pretty good. Not bad. I'm smiling. That's for sure. Financially free. Good to see you. Financially good. Always good comment stuff. Wouldn't it be safer to trade MNQ to let the 1 minute cross down and then cross back up to take the buy? Nothing wrong with that. That way, the 1 minute EMA buy lines up with the 5 minute EMA buy to increase success. I love it. What you're doing is you're doing basic top-down analysis. You're going multi-time frame, long to short. Absolutely love it. You're trying to get in line with the broader trend, 100%. In my view, it's much riskier to fade that pressure. Okay, so basically what you're saying is if you were looking at, and you're right. I mean, you're looking at a 5 minute signal. You said, okay, right there, that was about 21 minutes ago. We had a 5 minute signal there in gold. Okay, that came across the board at about 11:10 my time, 1:10 Eastern. And then you go down to your 1 minute. You say, okay, what do I got right there? 5 minutes later, you get the 1 minute. You get the 1 minute buy, right, with the 5 minute confirmation. So you've got 5 minutes, and then you get that 1 minute, and you're looking to rock it. I love it. I think that's fantastic. I absolutely think that's fantastic. That's a great way to look at this, a great way to do this. That in itself, the multi-time frame top-down analysis right there financially, that's worth its own video. That's worth its own backtest. That's worth its own coding. No question about it. I love that type of approach. I do it every day in the markets. Everything is top-down with me. Multi-time frame analysis. for the sake of what we're going to do here, probably just going to be shooting from the hip and taking some trades. But that right there, 100%. Great idea. Write it down. Back test it. Go for it. 5 minute right there. After you get the 5 minute crossover, then you go in there looking for the 1 minute. Get the 1 minute, 5 minutes later, boom, gone. It's beautiful. In itself, it's a way to limit risk and have a great confirmation device. You're onto something there, no question about it. All right, so there's a good look at our gold. Let's see, where's our NQ at? Okay, NQ starting to set up just the way I like. So to answer your question there, yes, you probably could be potentially looking to get long. We had probably the same situation there on that NQ, right? NQ was definitely a 5 minute buy, and then we had a 1 minute. Well, here's the situation now. We're deep into overbought territory. So my basic premise would be doing something like this that I don't mind. I don't mind doing it. Something like that, where you'd be putting your stop loss up here and then maybe a profit target down here. So theoretically, I would be looking to catch a reversal. I don't view this as being a trend. The reason why, we're only up 0.79%. NASDAQ has been heavy. Friday session, we haven't blown up 5%, 3%, 2%. I have no problem trying to pick a top here. And the reason why I don't have a problem doing it is a couple of things. Number one, we're going to be dynamic. I'm going to play with probably a much tighter stop loss, and we're going to look for an initial push. We're going to look for an initial push. We're going to trade for cash. So is this going to be a pure reversal play? Probably not. Probably going to take the money off the board. And I do believe there's a pullback in here somewhere. I mean, that's what markets do, is pull back. Thought we had one right there. A pullback now with where the market is better for me. It's better for me. That's how I would look at it. But the multi-time frame with the pressure, love it. It's fantastic. All right, we're going to come back to that NQ and see if we can actually get a trade developing here. Gold sort of fizzling a little bit. Same basic idea. It would be the same basic idea, but we're a ways off here from getting that crossover. We'll definitely be watching that one as well. All right, let's go and open up another tab and see if we can find a right market for us. Is one of those equities indices ready to sell finally? Let's go to the YM. This would be your E-mini Dow, same basic formation. You can see you had the 1 minute buy. Now we didn't quite get into overbought territory. This one, we're still sort of moving higher. I would be considering taking the cross under here. Absolutely. Is this the end of the move? That would be the question. I'd say, yeah, potentially. Let's go to a 5 minute here. We're not going to, we'll be waiting maybe till the end, till today's close to potentially get your sell signal going there. Something like that doesn't really impress me much. We'll be here waiting all day to get that done. Let's go. E-mini S&P 500, 5 minute, beautiful move. You can see the 920 caught all these bullish moves about the last past hour and a half. This was, you lost here. You lost right there on the open. Okay, you're trading the S&P 500 futures. The opening bell just rang on Wall Street. Ding, ding. Do you trade the first 5 minute crossover? I advise against that. And I'm not saying that just to filter out a loser. I mean, why do you guys think that would lose? It'll be like a big news candle, essentially. Look at all the volume. Basically, none of this matters. This price action in here, there's no volume at all in there. The volume, the game started, opening bell, ding, ding. Okay, we're going to get bullish. Why? Let these things develop a little bit. Even if you waited 10 minutes, you got that short to the promised land, and then you got an opportunity to come and buy this thing back. I mean, if you're talking about a great trading day, that's a great trading day. But you can't make that opening mistake. I stand by that, too. There's no way I would be trading that on the first 5 minutes after the opening bell on a U.S. equities index. No way. Absolutely no way. On stocks, I wouldn't do it on stocks. Not a chance. Not a chance. If you stuck to your guns, boom. Yeah. Boom. Yeah. Life's pretty good. So 5 minute chart, one of my favorites intraday, especially with the crossovers. You can see right here, we're dealing with the same type of situation with your E-mini S&P 500. It'd be interesting to see if those 5 minute charts each had a corresponding 1 minute crossover. I imagine they did. Curious when they would occur. Maybe they happen every time. All right, NASDAQ's up and away, so that's gone. Let's go ahead and see if we can get something cooking here on WTI crude oil. A little bit different game today. Okay, there it is. We got a 1 minute setup. We got to take something. I got to take a trade. Sell right here, about 30 seconds left. You can see the sell setting up. Now, a couple of problems with this trade. Number one, what are they? 23 seconds. 4, 3, 2, 1. What are they? You're in a weave. You're in a weave. Sell, buy, sell, buy, sell. What do you got here? We're starting to break a little bit below I'm going to take the trade anyways, and we're going to manage it. We're not going to rock a 3 lot. We're going to rock a 2 lot. We're going to go ahead and sell it. My trade management, though, is going to be very tight. Okay, there it is. Boom. We shorted it. There's your short. We've got $350 to work with. What do I want from a take profit? I want maybe something right down in here, 84.66. Where does my stop loss have to be? My stop loss, I could put it up here. It's too much money. I could put it here. It's too much money. Let's play this thing really tight. Let's play it right there at 160. Let's put it right here at 160 and see if we get some love. Now, this is tough. This is tough living. I like it. It's a cross under. It's got pretty good movement to the downside right here. Okay, so we're up $60. We're up $80. We're up 120. We're up 80. We're up 120. 120, 120, 120. Are we going to get 160? Are we going to get 160? This is a tight scalp, 1 minute chart, $100 right there. Take it. Boom, out, plus 80. Is that great trading? No, it's not. Why did I bail out before we got the big money and got paid? Why? Weave formation. RSI is right on the 50, right on the 50-yard line. Given that formation, our probability of being a winner here and catching a breakout, probably not that great. So if we were serious about making this potentially a strategy move, okay, there would have been your entry. We've only got $350 to work with today. That means I could have cut my leverage down and taken the position. But in order to make that worth it, we've got to get a move. Realistically, we've got to get at least a 1-to-1. Given this market condition, given these market conditions right now, you're up a 1.39%, 84.75. It's a Friday. Wartime. It's a wartime Friday. Do I want to be holding shorts? Do I want to be holding shorts if we're near the 50 on the RSI and we've got a weave, a 1 minute weave? If I was going to do something like that, let's reverse our top-down analysis. What do we got on a 5 minute? Not a damn thing. Not a damn thing. What do you think about taking the money off the table now? It was a good idea. We got the initial push. We got $80 out of it. After commissions, we cleared $70 on it. The trade never really went against us. That's cash trading. That puts us up over $1,000 for the week. It's not sexy. We're not. You're never going to see me on a private jet going, oh, the 920 crossover got me billions of dollars. You're never going to see that. But what you will see, I'm probably going to shoot some videos. I mean, I'm going on vacation for a couple of weeks. So, you know, there are ways that you can make these things work for you that don't have to be Ferraris and private jets and new trucks and, you know, big gold chains and diamond earrings and things. It doesn't have to be that way. You know, you could be a lunch bucket guy. You could be a lunch bucket hard hat person and do it. Okay, so right now we throw $80 in our coffer. Okay, come to Papa right here. Okay, I'm starting to like this. Now, the only problem with this NQ, realistically, the only problem with this NQ trade is it's going to be really expensive, so we're going to have to cut our leverage down. It's coming up, though. It's starting to develop a little bit. So instead of 2s, you're probably going to have to trade 1s. Something like that. Let's wait and see what happens. We've got 350. What was it roughly? We were going to risk 350. Plus, we just made 80. So we've got 430 at our disposal. We're playing for cash. We got 430 at our disposal. 43 ticks. Beauty of that's you're playing with house money. You start playing with house money, then I don't mind if you take a shot at a 1 to 10. Then it's fine. It doesn't bother me none. WTI crude oil, I would love to see a rebound right here and a crossover, giving us a potential buy going into the close. I would love that. This right here, we thought it was developing here. Didn't quite develop, but if you do get this crossover, 5 minute crossover, could be pretty good. I would much rather be bullish going into the close today for WTI than I would be bearish. Despite, you know, this sell right here was pretty good move. Caught a pretty good move. This buy, pretty good move. This sell was a complete loser. Right around the 50-yard line, though. The 50-yard line in the RSI, right around 50. I mean, it's no man's land in there. It's no fun. No fun. Let's go back to our gold chart. Gold chart right here, 1 minute, starting to tighten up just a little bit. Let's take a look at our 5 minute. 5 minutes, still really nice, really a nice long side trade. I mean, I can't argue with any of that. That's good stuff. Right here, NQ. Okay, I think we're going to be dancing here in another minute or so. We're going to let that one simmer. What we're going to be looking to do, I mean, realistically, for me to play this honestly, we should definitely go to a micro. Let's go to a micro here. Let's see. What a contract's $5. What, $5 a tick, I believe? We'll just leave it. We'll just trade ones. I do like micros, though, because then you can trade multiple contracts and we can scale in, scale out. That gives you a lot more strategic freedom, a degree of freedom, so to speak, when you're talking about trading the micros. I highly recommend trading micros. I usually like trading full size just because I don't do much of the ladder approach, take profit 1, take profit 2. I don't really like doing that. But if you're one of those traders that has 3 or 4 take profits and you're trading something like the E-mini NASDAQ, yeah, micro. This full-size contract can eat your lunch because the volatility is so massive. That is why 95% of the live streamers out there are sitting there watching the same charts we're watching right now. They're watching short-term NQ charts. Most of them are trading channels. You know why they trade channels? Because you get a lot of trades. We could sit here the rest of the day and not get a trade. Something to think about. All right, let me see. HEMA, NQ getting a VWAP rejection on the 5 minutes. I like what's happening here. I'm not necessarily certain how we're going to trade it because let's be brutally honest. Our stop loss needs to be up there. How much is that going to be? That's 50 points. Somewhere in the vicinity of 50 points at 4 ticks a point. That's 200 ticks. 200 ticks at $5, that's $1,000. I can't afford it. Got to take it down to a micro. That's if I want to take a position. More than likely, we're going to play this as a 1 minute scalp, not a position. And that's if we even get the cross under. All right, here we go. This I like. Okay, what's our low down here? WTI crude oil, 84.61. 5 minute chart. If we get that, we're going to take it. We could also use that idea, that concept. We could take this 5 minute signal, go down to a 1 minute chart, and wait for confirmation. We could certainly do that. Personally, I'm greedy. What's our risk going to be here? About 85. What's the low there? 84.61. Okay, it's too much. We could put on probably one contract, something like that, and we could buy it. Stop loss is going to be right beneath this swing low. This would be a position trade. We're going to end up risking somewhere. Let's see, the low 61. It's going to be somewhere around $400 right down here. So it's going to be 400 potentially. All right, there we go. We're long. Stop loss. You can put your stop loss right there. That's 410. What do we got? We got 430 to risk, so we could do that. If, in fact, you're going to make that trade. Something like that. If you're going to do that, you got to get paid for it. I would be looking for a buyback towards the close, maybe somewhere up towards 85.50, something like that. That would be the position trade. And that hitting a trade like this, honestly, it's too expensive as far as I'm concerned. But it does put you in a position to have not just a good week, but a monster week. Think about it. With our money management, we're already playing with house money. If I want to shoot for it, I could shoot for something like this, thinking that maybe we're going to finish on the bull, something like that. Could definitely do it. Could bring it right down to a 1-to-1. We could trade a 1.5-to-1, shoot for the top of market structure there. We could do that. I don't mind the long trade at all. Let's go down to our 1 minute chart and see exactly what we have cooking here. Okay, so essentially there was our confirmation. So we've got 1 minute confirmation. We've got a 5 minute signal. We've got a strategically sound trade. Is it worth taking? Well, it's going against us. It's a position trade. We've got about 45 minutes of premium WTI trading left. That's what we have. Can we get any money out of this at all? I think so. What we did run into problems with was 85 flat. So what happened at 85? The seller stepped in and defended 85. It's obvious. Now we're coming back down to 84.93. Are we going to get a runner up over 85? I believe it's possible. I don't know it for a fact. Our indicators are telling us that, yeah, more than likely we're going to get a runner over 85. So if that is in fact the case, take a look at our RSI. Our RSI was sort of elevated. We bought it up there at about 63. It's tapering back down into here, which does give me a little bit of confidence that our stop loss is in pretty good shape. However, we're losing. So the sellers were there. The sellers were there at 85. Will they be there the next time we test it, or do we test it again? Right now we're down 60, down 40. I think this trade has tremendous potential. I really do. Nice retracement. If I was going to use a Fibonacci, I would say what? Of that price bar, probably beneath 38%. Now we're starting to break positive, somewhere in there. Top of market structure, top of 5-minute market structure is right there. That's relatively conservative. Let's bring this down just a hair, and we'll see how this goes. Does it have potential? Absolutely. Do we have to get some love above 85? We better. If we don't get any love above 85, we're going to lose. So does that worry me this late in the week that we're rotating around a big round number like 85? Hell yes, it does. Are we running with the macro trend today? Yeah. We're up 1.71%, so we are running with the fish. We are swimming with the river. Is this a good time to be taking this trade? Well, 12 minutes left before we go to the 2 o'clock hour. Premium WTI trading's over at about 2:30 p.m. Eastern. So we've got about another 40 minutes to make this trade happen. I want to see clear definitive price action. I want to see this thing break and go in our favor, $250. If it does that, we're probably going to take the money, make it a 330 day and walk. I have no problem with that. Right this minute, how am I starting to feel? We're getting bids above 85. I could care less about the money. Flowing back and forth, I could care less. What this game's about right now for us is getting bids up above 85. Look how far our profit target is away. See what I'm getting at, right? What's important for us is we establish a floor right around 85 and set ourselves up maybe for a late day run. If we wanted to bring this in, give ourselves a better chance to succeed. 430. 85.44. Betting on a run to 85.50. It's not a bad idea. You guys see what I'm getting at? All of these things have to go into your thinking. Now, if you're a straight systems player, you just throw it down and you let it twist. You just let it unfold and see what happens. I like to see the bidders coming in. If the bidders keep defending 85, then we have an opportunity. We bought 85.01s. So it's very, very simple. Our technicals lined up perfectly with 85.01s. We're coming into a pretty good period to be active in the crude oil market. We know there's going to be some volume and some volatility there. The only thing that can really hurt us is maybe a news release, a late day news release. Hold the WTI futures into today's close because it's a Friday would worry me a little bit, but it's starting to look pretty good. Now, the question becomes, do we move our stop loss? Do we try to play the symmetry game and move our stop loss right up beneath that five banger right there? We could. If we wanted to, we could certainly do that. We could go to 84.90 or 84.89 with our stop loss and then look to get maybe, a continuation up to about a quarter, 85.25. What I would say is if we end up trading 85.25, we're probably going to trade 85.50. That's what I would say. And right now, see, you got the reversal. You got the reversal right here. You've got compression around 85. So it either breaks in our favor or it doesn't. The best of it may be over for us. We don't know. I still think it's a pretty good trade, but I feel a lot better with price above 85. It looks to me, okay, they came in and swept lower. We could be in big trouble here. The beauty of it is we're doing it with their money. Still, I don't like to lose. But this trade hasn't produced much of anything for us. There are some bidders there, and essentially that's the play. That's the move. So something to think about there. NQ, we missed the NQ, but there was your NQ sell. We got sort of the crude oil trade was definitely a good way to really think through these examples. But you can see your NQ is really developing there. Do I like the NQ? This would have been a tough one, guys. If we were doing a short right there, you're short there, and then your top side right there, you probably would have had your stop loss right in that zone. So you'd have been looking for at least something like that. Pretty good trade, but now it's retracing on you. Sort of begs the reason, and this was another video that we made, was improving your entry points. Could you use maybe Fibonacci retracements to do something like this? Okay, now our crude oil trade's getting blasted. We're going to lose, it looks like. Yep, they dug in at 85. Well, that's life. We're not out of it yet, but still. So the idea would be, hey, what do we do? Can we go ahead and sell using this indicator, maybe sell retracements? Yeah. Superior price or a superior entry on these trades, that's for sure. Now you're reversing around, you're going up, you're going up, you're going up. Probably going to get stopped out on that one, so that would have been a tough one. NASDAQ, let's go to a 5-minute NASDAQ. Not even close. Not even close. Not even close to a crossover. So something like that would be a real challenge. Let's see, we're printing 84, 83. I think we're about out of that crude oil trade. We're getting smoked. Pull back right to the moving averages, the baseline, sort of where we've been trading for the last, 30 minutes? No, about the last hour. This has sort of been downside support. Breaking through there now. Now the question becomes, it looks like we're out of it. Looks like we're going to get stopped. Still walk away a winner for the week. Up about, 450? 500, something like that. Not bad. I would much rather win this trade, but this is sort of the way it works. If you're going to take a shot like this, take it with their money. That's for sure. For me, I'm not ready to jump ship on the trade just yet. I do want to know where my stop loss is, though. Low right there, 61.58. Yeah, that's fine. If it rotates back down to 84.50, we lost. No question about it. 220, 200. Doesn't look good. We need to get some bids, and we need to get them soon. So your gold's still trekking higher. 1 minute chart just on the stairway to heaven. This was a beautiful 5-minute play. This is probably what we wanted our crude oil trade to look like. It's not, but something like this, very nice. Absolutely very nice. We had the 1 minute compression as well, or the 1 minute confirmation. It's right in here somewhere. Yeah, right there. A lot of these you'll see are dojis. So you got to blow your chart up to see them. 84, 78, and 79. We're going to get swept out of that crude trade. Well, it's been that's frustrating to me. That's for sure. Let me see. Kevin, good to see you, Kevin. Good afternoon from Lakeland, Florida. Crypto Gambles, where to get the gold and purple bars after EMA Crossover's indicator. That is on the video over at How to Trade Calm on YouTube. Go ahead and check out our video, and it's in the first section. It's in the first two comments. I believe the first two comments. NQ getting VWAP rejection. Yeah, so I hope that helps you, crypto. Whipsaw stuff. Let me see. Tom Johansson. I'm staying out of this market. The yen intervention may be happening right now. Spiking dollar up and down. Same with the bond market. The yen intervention was the biggest story that we've seen. No question about it. The biggest story we've seen in a long time. Let's go ahead and pull it up. We can cover it real fast while we're waiting for this WTI crude trade to sort of work itself out. Let's go. So Japan likely spent around 8.45 trillion yen. Yeah, I was right. It was $52.8 billion in a massive market intervention to support the yen. The suspected coordinated action occurring just ahead of the Bank of Japan's policy decision successfully pulled the currency back from four-decade lows. Dollar eases against the yen as intervention risks keep traders wary. BOJ data suggested Japan intervention of about 8.45 trillion trend. BOJ holds rates static at 1%, says inflation's going over 2%, and that they're going to raise interest rates. Joint currency intervention. They may have spent up to $58.97 billion supporting the yen. That is staggering. That is staggering. Absolutely staggering. $53 billion. That's unbelievable. Okay, so back to our crude oil trade. So what's happened here? If you move your stop loss up there, we're already gone. I don't recommend doing it. I don't. I think you just build the trade out the way that you need to build it, and then you let it, as I've been saying, you just let it go. You let it swing. You let it twist. If you want it out right now, having the week that we've had, and you say, you know what, we made 80 on the other trade. I'm down 110 right now. I'm just going to go ahead and take a $40 loss and get out and walk away up about $1,000 for the week. I think that's a great idea. I don't have any problem with it. Right now, it looks like this thing's going against us, and it's going to eat us up. Not really much question about that. Let's go down to the 1 minute chart. 1 minute chart. You can see we still haven't got a cross under, but it's developing. There it is. Do we get out? Cut our losses and bang. I mean, 190 is not the end of the world. 200 is not the end of the world. I'd rather lose 200 than 450, right? 170, 160. I don't know. If we get a bullish kick here, maybe we can make a case to start thinking about staying in, but we probably should be looking for the door here. 3 minutes till the 2 o'clock hour in the East. The next 30-minute bar will tell the tale. Do we get a pump? Do we get an end-of-day pump? It's not really a big pump. The risk is down. The money's down. Let me see. Financially free. I had to walk away. Did you already answer the question about what site or indicator we can use to see what percentage of the future is moving? No, I don't remember getting the question. I must have missed it. What was the question? What site or indicator can we use to see what percentage of the future is moving? You must be talking about volumes. I'm not sure. I don't follow. Price dead right around 84.40. I mean, this feels to me like the market's getting heavy. We'll see if we survive. We may not. Not much fun watching these things twist against you, is it? Gold's starting to stagnate a little bit at 4,100. The NQ, look at the NQ. Theoretically, I mean, unless you put your profit or stop loss right here, you're probably still in these shorts. Probably still in there for a minute, right? Let's go to E-mini S&P 500. 1 minute, little 1 minute sell got you some love. Let's go to a 5. That is what we were looking for here. That's nice. YM, E-mini Dow. Interesting. Well, we're getting eaten alive here. Let's go, let's try this. Yeah, I mean, we just have a target up there right near the point of control. I mean, where's our stop loss at? Our stop loss is right in here. We're trading right at the 30-minute moving average. We're trading 84.75s. The bidders are either going to be here and force this back above value, or they're going to stop us out. This could really suck. That's no kidding. That's not a bad trade at all to be taken with the pressure. But you'll notice that the big move in crude oil was definitely during the overnight. Yeah, we're going to get stopped. That's going to be frustrating right there, because you're, in a lot of ways, you're the right way here, but it's not working. It's not working. 71, 72. I mean, we need to see a pump up to about 75 or so. Yeah, we're not even going to survive. Okay, here's the 2 o'clock hour, and we're going to get stopped right now. Welcome to crossover trading, huh? Should be short. I mean, theoretically, we could have bailed out when that short signal showed up. Saved ourselves a couple $100. Could have done that. That's our max. We're gone. All right, well, within a tick, we're gone. Finish it up. Finish it up. 61, 64s. I mean, it's within a tick. Typically, when you get this far down the rabbit hole, it's finished. Yeah, there you go. We're finished. No fill, no fill, no fill, no fill. All right, we're out finally. Okay, so that thing was an absolute bust and a loser. So fantastic stuff there. My compliments to the chef. Nice 5-minute trade. Started off really good. We just didn't get the bids above 85. Now you're trading 84.57s. It would not shock me to see us make a run at these lows down here at 84 somewhere. Typically, when you see that type of symmetry get broken, meaning this uptrend that we sort of based right around 84 to 85, we're pretty much thinking we're going to finish up here somewhere, and the market just fell apart on us. That's essentially what happened. You'll notice that the volume comes in right at the right at the bottoms and the tops of the hour. So right there, you've got 2 p.m. Eastern. you get the big flood of participation, and that eventually costs you the money. So we actually took a 430 hit. We were risking 350 today. Our first trade was a winner. It was an 80 spot. And then you'll see our weekly performance. That's going to take us down to 350 off of that. So we're right around what, 620, somewhere in there. 350, 6. No, it's going to be right at 600 after commission. So that was one contract, so $5. So you're looking right at probably 620, somewhere in there. So way to end the week on a down note. That sucks. I wanted to win that trade and put it in to high gear, but still a relatively solid trading week. We did a lot of TPO trading. Pretty good look at how to execute a no donation Friday. We took a shot. That's all we can say. Our system lined up. We had our rules. We had our entry. We took a shot and got stopped out. The beauty of that right there, and that's why we talk about that no donation philosophy on Friday, is you're still walking away a winner. So even though that was a loser and it kind of sucked and took us down a little bit, you're still walking away feeling pretty good about the week, and that's what this game's all about. So remember, consistency is everything. Momentum's everything. As far as the 920 EMA, though, I really like it. 4-hour chart, daily chart on Forex pairs. Those would be my bread and butter. Those would be swing trades. Intraday trading, 1 minute and 5 minute. Never hurt to get some confirmation. I like the 5-minute chart. I think that's a pretty good approach. You saw from our equities indices, it's been just lights out today, especially with that E-mini S&P 500. As far as late in the day, maybe there's a little bit of nuance with regards to things like crude oil and gold. But as far as I'm concerned, gold, you're probably in pretty good shape. London, U.S. overlap. That's probably where I would be focused on if I was scalping, say, on a 5-minute chart or maybe a 1-minute chart. So you definitely want to do that. But as far as the losers, you've got to be sure that the losers don't clean you out and the winners pay you. So you're looking for at least a 1-to-1 risk versus reward. Or if you're going to scalp like we did today, maybe immediate positive price action, you're taking the money, you can do that as well. You just have to operate with a much tighter stop loss. The key is always to make sure that your winners are outpacing your losers. You can't afford to take a bunch of small winners and a massive loser on a trade like this. You can't do it. So if you're going to position trade like we just did in the crude oil and got hit, what you're going to have to do is make sure you get at least a 1-to-1, at least. Now, if you're scalping that NQ and you're looking at like 1 minute or 30-second charts, keep those stop losses tight. You're looking for immediate positive price action. And the last thing I'm going to say is this. I said enough today. Last thing I'm going to say is this. You have an opportunity to do all sorts of back testing on AI now. They got algobuilder.com. They're working on that all the time. You can go over and check that out and put some of these principles in there and see if you can build winning back testing strategies. I wouldn't focus so much on the actual returns, but actually on your success, your percentage of success and things. That's important. Consecutive losers, those are important. I mean, if you trade a system like this, you will lose. You're going to lose, but you also are going to have opportunities to be in the market and win. And when that's the case, you definitely have to be in the market to make the money. And so taking a lot of trades, that could be it. WTI crude bouncing back in our favor, 84.39, something like that. Coming off a sell signal, now it's reversing. We're getting into our weave. Now we're at 84.88. This is all about war, and this is all about the end of the session. Back up to 84.92, 84.94, 84.96. Now we're back up to 85 after we get stopped out. One last tip, and this is a pro tip. As soon as you take a loss or a gain, or as soon as you exit the market, the absolute best thing you can do, is just turn the channel. Don't sit there and watch the price rebound in your favor. Don't sit there and watch price go up to, you take a 1-to-1 and it goes to a 1-to-10. Don't do that. Absolutely don't do that. Once you're out, you're out. I don't give a, well, pardon my language, but I don't give a shit which way it goes. It's back up to 85 right now. We knew that was coming. It was just a matter of if we got stopped out first or not, and we got whacked. What was the low there? 84.55. We got whacked. It's the way it is. All right, let's see here. Hema, good to see you. Talking about the depth of market. All right, I got way behind. Financially free. I thought you went to a site earlier and determined that NQ was moving like 1.7%. No, I went to a site right here. We were looking at gold. I was looking at the quotes, trying to determine which the front month futures contract was. So if you wanted to do this, this is CME Group. So if you wanted to look at NQ futures, this would be really simple. You just go to featured products. It's definitely become one of the more popular ones. But like, let's say you want to look at S&P, you can also find NQ in there too. something like this. You go to like E-mini S&P futures, click on that, and then you go to quotes. And they have the same thing for NQ there. And the quotes would give you, these are all delayed, but it would give you the move. What I'm interested in is the volumes. I want to know the front month futures contract. That's what I want to know. That you always, if you're trading futures, you always trade the front month, no question. So I hope that helps financially free. I think that's what you mean. Let me see. Depth of market. Yeah, let me see. Is there a way to set up market profile charts in MT5, Alec? Not that I know of. Not that I know of. Maybe do some quick Google searches. I'll look into it as well. But I believe if you're going to get that accomplished, you're going to have probably some sort of expert advisor. You're going to have an EA that's going to be like a third-party add-on that will give you the volume figures. But you could also, I'm trying to think of a way to do it. I don't know. It's best with futures, market profiles with futures. You try to do it with Euro USD or some of those OTC markets, you're going to run into trouble because they're over the counter and the volumes there. I'm not saying they lie to you about volumes, but they don't have to tell the truth. Sean Evans, you're welcome, Sean. Unfortunate. I'm sorry to see you lose on No Donation Friday, Alex. That's what it is, though. I mean, let's put it this way. If you're happy, I mean, you could go ultimate No Donation Friday and say, I was happy going in and I didn't want to trade today. You could do that. I don't put that on the list because I believe you have to trade, especially when things are going well. You need to try to maximize, and taking calculated risks with someone else's money is something we should all really be receptive to. I hate losing. Especially when the chart looks like that. You're starting to see it bounce back, but we're in a textbook weave, probably stagnate and trade right around 85. You're welcome, Vemden. All right, guys, I'm going to go ahead and sign off. I've gone long enough. We got one more question there. Absolutely financially free. You are absolutely welcome. You have a great weekend. Hema, that's gold nugget. Every time I always got tempted to take revenge trade when I'm looking at the price after I lose. That ultimately results in blowing the account. I want you guys to be very, very cognizant. This is the last thing I'm going to say, but we're talking about this strategy, so let's do it. We took this one. We got our ass kicked. We lost. Then a sell sets up. Your instincts are going to be, fine, I'm back in on the sell. Trying to get that money back. Oh, well, a sell setup. Well, my buy didn't work, so surely the sell's going to work. And look at what's happening here. The sell's getting destroyed. You may get another crossover buy right here. So when we look at this stuff, you got to use your head. You got to use your head. And also with something like crude oil that's as finicky as it is, it's 2:10 p.m. Eastern. This is what we call K period. K period, there's always a move. So in the last 5 minutes of this 30-minute bar, the last 2 minutes or 1 minute, you're going to see a directional move. What we were hoping to, and as soon as you find yourself hoping, you're a dead duck. But what we wanted, the ideal scenario, was to be trading up here right around like 85.10, 85.09, 85.05 going into that last 5 minutes. That would have given us a legitimate run at 85.50. It would have. Now, more than likely, you make one loser, you take one loss, and you move on, look for another strong trade. You get your clock cleaned, you come back, and you look for another strong trade. You don't just jump into the next signal you get. That's the biggest downfall and problem with any sort of crossover strategy, with any sort of algorithmic trading strategy. Ooh, I'll just double up on the next one. Don't do that. Eventually, you will hit a string of 3 or 4 losers in a row, and that will be the end of your account. So HEMA ultimately results in blowing the account every time for life. So take one loss. For me, I have a 2-loss rule. I lose twice in a day. I'm done. That loss serves me well on Tuesday, Wednesday, Thursday when we're looking to be hyper-aggressive. My Mondays and Fridays are typically already ironed out money-wise. I know exactly what I'm going to do on Monday. Very conservative, small wins. Don't care at all about making a lot of money. Friday, we give back maximum 50%. Today, we gave back about 40% of the week, 35%. That's okay. I mean, believe it or not, it's not ideal, and you'll probably be bummed out after you take that trade and lose going into the weekend. But tomorrow will come around, you'll sit around and you go, you know what, I had a pretty good week. And Monday starts another week. So it's all psychology, guys. This game's all psychology. All right, everybody, I'm going to sign off. Remember, next week we are going live on Monday with the week ahead. The timing may be a little bit different. I haven't decided yet. I have an interesting day scheduled for Monday, and then I'm going to be gone Tuesday through like the middle of August, going on vacation up to Alaska. Never been. Very excited. Maybe do a little bit of fishing, eat some crab legs. No, it's going to be a lot of fun. So I'm looking forward to that. So I'll be out on holiday for a couple weeks there, but we will be back probably mid-August to late August, and then we'll start getting into those fall months after Labor Day in September. It's going to be pedal to the metal, and it's going to be time to trade. So I'm very much looking forward to that. But for right now, I'm coming back. I'll get you the week ahead. We'll get you lined up and ready to rock and roll for next week, and then I'll be gone for a few weeks, and then we'll talk about how we're going to trade the fall, how we're going to trade the war, what we're going to do to meet our financial objectives by the end of the year. Can you believe it? We're already diving deep into Q3, so it's going to be fun. Let me see. Hemud, I gave 90% of my weekly gain. You still walked away a winner for the week, though. Take that 10% home with pride. That's for sure. I will, Alec. Absolutely. Okay, guys, I'm going to go ahead and sign off. If you need anything at all, head on over to the How to Trade trading room. Click on my picture, send me a private message, and I will be sure to get back to you if you have any comments about the program, if you have any comments about the strategy, if you like it, if you don't like it. I answer it all. If you have any questions about what we're trying to get accomplished with How to Trade and over at Switch Markets, feel free to reach out, and we'll get after it. All right, thank you very much for watching our workshop today. Unfortunately, we came up on the wrong end of it, but we win a lot more than we lose, and that's okay too. Have a fantastic trading session. As always, trade the action well, and we'll talk soon. See you. A quick one before our live stream starts. If you're not already subscribed to our YouTube channel, we go live there every day trading the markets, covering world news, and talking through setups in real time. Hit subscribe so you don't miss the next session.
Still doom scrolling? Brain rot taking over? You'll focus tomorrow, right? But what if tomorrow never comes? What if it all started with one small choice? The world won't wait for you. Opportunity is moving right now. One decision is all it takes to shift your momentum. Fuel your mind and watch possibilities open up. Small wins stack up, focus sharpens, growth begins. Everything changes the moment you focus. Lock in and make the switch today. Bring your ambition into focus. Trade with Switch Markets.